Hi, my name is Laji James, and I'm a private practice pediatric dentist in Houston, Texas. As an undergraduate, I graduated with a Bachelor of Science in Business Administration with a concentration in finance. With that background, I've found that the business aspects of owning a practice have been very interesting to me. When I was an associate, the focus of every day seemed to be production, both from my employer and from my daily activities. When I became a practice owner, collections and profitability became more important. Now, production is also very important, but I feel one of the least talked about issues is profitability. I believe that profitability is primarily a function of your collection and your expenses. And so, in general, you take a month's collections and you subtract that previous month's expenses, and then you get profit. And I believe that profit is one of the more important things that young practice owners neglect. My plan to teach you about how to get profits is through using a budget. To gain an idea of how to use a budget, first you need some data. You'll need to collect at least 3 months of past collections and all of your expenses. 6 months would be better, but 3 months will suffice. If you have been in practice for a while, you can have your accountant split these up. Once you've accumulated that data, then take your average month's collections, then take your average expenses. With your average expenses, we want to separate them into different categories. 1 is doctor's salary. 2 is overhead, both fixed and variable. And then this is something that I do. I think you should have a certain budget category for savings, for return on investment, and then one just for profit. To give you a general idea, a doctor's salary should be about, let's say, 25% of practice collections, and then 50% can be assigned to overhead, and then 10% can be assigned to your savings, 10% to return on your investment, and that would leave 5% for profit. So the profit comes back to the owner as a way to pay yourself for managing the practice. Now, that 50% number with overhead is actually the key number to focus on, because with that 50%, you have a lot of room to take it down to 40%. If you take the expenses down to 40%, then that 10% will go back into your profitability, and now you are making, instead of 25%, you are making 40%, which is a big difference. And so there's no way you know exactly where the money is going without first tracking it. And then once you track it, you can start assigning targets to your overhead categories. For example, if you are currently spending 10% on dental supplies, in general, that is higher than you need to spend, much higher than industry norms. And so that means either you are using too many things, you're ordering too many things, or you're paying too much for those things. And so if you set a more reasonable target at 5%, 4%, 6%, then you can see, what do I really need and what am I wasting? And in that way, you can lower your expenditure and see what the reason is that you are spending this amount. The same thing could happen with, let's say, your payroll. Payroll is typically the highest thing that you'll pay on your expense side. Typically, your average payroll can go anywhere between 20% of collections to 30% of collections. So if you're at 40% for your payroll outside of the dentist payroll, you're probably paying too much. And so then you can ask yourself, am I overstaffed? Or do the staff I have, are they getting paid more than industry norms? And so in these ways, you can find out reasons that your practice is not falling under standard operating guidelines for a dental practice. This is just a brief summary of budgeting for a dental practice and assigning budgetary categories for a dental practice. We can talk more in depth at a later time. Thank you.